Okay.
Yeah, I'm just closing all these windows.
Yeah, it's should be starting now.
Okay.
Um, Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are you're watching this video because you got an email from me by being on my free email list. If you're not on it, click the link associated with this video so you'll get my next email update. I send one just about every single day. And today I got a very special guest. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. It's been a while since we've done a video like this, but I thought this would be a critical time or a good time to do one in light of what's been going on in the markets over the past week. We saw gold fell over 100 points last week. We saw a little bit of volatility in the S&P and the Dow. And we're seeing today crypto, the market fall apart on the open, at least in the morning. Bitcoin was below 30,000, but it's climbed, crawled its way back above that level to bring some new hopes to people involved in the crypto markets. How you doing today, Dave?
Good. I'm pretty good. Yeah, like we said, we've seen some volatility. We've seen this decline in gold, which we'll probably get into in a second. And I don't know, we're seeing this continued rally. The markets are all near their highs. And if I can start on that note, because one thing I've told Mike kind of off camera or personally when we talk face to face is basically like I kind of studied a lot of these past market moves and past bubbles. And what's kind of interesting about the market is that this kind of consolidation or correction we saw in the spring, if we kind of see a breakout now into, say, the next 2 months, into like the middle or latter part of August, it actually looks very similar to what happened. And like, I'm not one who's going to sit there after years and years of these gains and try to predict crashes over and over again. But it is very similar to the 1929, 1987 markets, where they same kind of thing. They went higher, and then early in the year, and then they kind of had this consolidation, and then they blew off into the latter part of the summer, and then of course had one of these fall crashes. So I don't know if that's going to happen, but I would think that if, say, the S&P takes off to 44, 4,500, something like that over the next 2 months into the summer, I think you have to be a little more wary about something happening in the fall.
Well, I'm trying to bring up a chart. Can you see that? I'm trying to bring up a chart going of the S&P 500 going back to 84. Can you see it?
Yeah, I can see it. Yeah.
Okay. Yeah. Well, anyway, you can see it, but you can see what happened in 1987 as you're talking about. It went straight up and then crashed. In a similar way, the market's done that. It didn't fall that dramatically as it did in 87, but it sort of did something similar in 2018 in the first quarter. It only fell like 10%, but it got extremely overbought after going straight up for 90 days or so. And it also kind of did that last year, even though COVID hit and the market collapsed. It was going straight up into that, sort of like you're speaking about. It's not quite doing that at the moment, but I'm concerned if it did do that, if the S&P, let's say, broke out, but over the next couple months and went up, straight up 5% or something over 30 days or 6 weeks, I would be very worried that things would stall out. And you're saying, I'm not saying it's 100% guaranteed to happen or 50% guaranteed to happen, but if it does happen, I'm going to get very cautious and hedge and take action in regard, because it would not be fun.
Well, here's another interesting kind of comparison, because we're kind of seeing these bubble-like valuations like 2000, et cetera. is that in 98, when you had the Russian crisis happen, and you can see it looks like a little blip there, but it was almost a 20% decline in the S&P. I think the NASDAQ fell about 33% during that, decline. And that was a very quick decline, similar to kind of like last year when COVID happened and the lockdowns were happening, right? So then the market went up for about 18 months and then peaked in March of 2000 and then began this massive bear market, excuse me, which took the NASDAQ down, the S&P can see fell almost 50%. But of course the NASDAQ fell nearly 80% on that bear market. So that's kind of a similarity too, that we had this short, sharp correction. The Fed cut rates, put all this liquidity into the system, and then the market rallies for about 18 months. And again, if we were get a top saying kind of like the August, September timeframe, you're going into about 18 months, similar from say the October of 1998 to March of 2000 rally. So there's some similars, and you see that Shiller PE ratio it hasn't been there since essentially, that March of 2000, or sorry, since the 2000, March of 2000 top. It's higher than it was in Black Tuesday, and you can see why 1987 was just a short, almost like severe correction, even though it felt very painful at the time because the valuations were nowhere near as high as some of these other, bull market tops like 29, like 2000, like even 1966 or early 1900s, when, there was a pretty severe bear market in 1907 and then in the early 20s. So I think that this being this high is again getting kind of scary. And who knows, maybe, again, if the market sees another blow off here in the summer, we might get a double top with the March of 2000 high in the Case-Shiller index.
Well, one of the implications that are behind this possible scenario is that short term, right now, as we go into the end of this month, as we go into the beginning of July, you don't really see a sign of an imminent market collapse. If anything, you're saying that the pressures short term are more to the upside than the downside.
Yeah. I think I think that right now, like, to be honest, seasonally, this is not the type, it's happened a few times in the past, but usually if you get some kind of decline in June, it tends to be just a correction. That actually happened in June of 2013. But yeah, seasonally, we're just not there. Usually the more sharper type of declines like happened in 2011 or 2015, 2018, 98, obviously 87, 29. They usually happen later in the summer. So as early as, say, late July to later in the fall, So those are the kind of things that happen, right? So if you get a decline in markets, So, more severe type decline. So I don't think in the short term, we're really in the kind of, we're in danger of seeing something,
But there has been some danger in spots of the financial markets. Just to turn to other ones besides the U.S. stock market, for instance, we have seen a very vicious decline in the price of Bitcoin from 65,000 to today. It briefly went below 29,000, is trading at 32,000 at the moment. So a lot of people, on Twitter are calling this an ultimate bottom for Bitcoin. Of course, they were saying that when it was at 50,000 and then when it was at 40,000, and we're wrong. Could they be right now?
Well, I think the thing, Mike, is I'm actually going to put because I can't put up a chart if you have, but if you can can you get that Bitcoin chart? Just show 2018, because I want to show, just go, from like whatever, January 1st, 2018 to January 31st, because Bitcoin last year kind of traded like it did in 2017, when had a huge parabolic rise and all these cryptos were on fire and all of this sort of thing. And first of all, you look at that chart there, that doesn't really look like Bitcoin is just going to bottom right here and then move higher again. That looks like we're starting, but kind of notice in 28, first of all, 18, there was about a 50% decline like we've had now. then more or less Bitcoin was bouncing around. It was more like 60%, 7, 8,000, and then it kind of tanked again in late 2019. And it bottomed at around, I think it was around 4,000 in early 2019, late 2018. But what I want to think is more important than that is back then, Bitcoin led the market. There was a correction in the market, like you mentioned, in 2018, earlier in the year. And then later in the year, the fourth quarter, the S&P fell 20% in price. So I've always thought that the Bitcoin is more correlated with tech stocks and risk assets than it is gold, silver, the store of wealth, like a lot of crypto people think. So I think that if Bitcoin kind of continues to trade this way, even though the stock market may continue higher, like it did in 2018 until October, that what will happen is we'll see the market kind of maybe follow Bitcoin. Bitcoin's kind of the warning sign, right? The speculative assets are about to decline at some point, and then we may see the market roll over later in the year, kind of following Bitcoin's lead.
Yeah, for sure. The last thing you said cut out, but you said the speculative assets were declining. We've also seen some other weakness in many of the popular Robinhood stocks, typified by the ARK ETF. I'm just going to pull it up too, just to show.
Yeah, that's had a bit of a rebound, but it's still way off its highs.
Yeah, and it's still below the 200-day, the 150-day moving average, just as Bitcoin is. It's, one of the things that has been a theme in the markets. I guess there's two things happening. One of two. The first, there's a theme in the markets of the great rotation out of many of the big winners of last year, the fad stocks, typified by the ARK ETF, typified by crypto collectible coins that have no connection to earnings, dividends. They're pure speculative instruments out of these assets and into things that are more linked to the real world and growth and commodities, things used in everyday life. So those sectors started to lead: real estate, energy. When ARK topped out, money flowed into these things. Some of them have come back last week. Commodities pulled back, for instance. But as a whole, this is like a rotation. So it's either a big rotation and you got to get out of these cryptos and ARKs and this crap any chance you get, or it's not a rotation and it's all some sort of weird topping phase, not just in the cryptos and some of the weird stocks, but it's just weird. I don't know which.
Well, again, if you kind of look at the market, okay, they've fallen a bit the last month, but what happened is in the spring, when some of these ARK stocks and the tech stocks began to fall, for a while, the JP Morgan, the other financials were doing well, especially when long-term rates are backing up. That's good for them. And then, you look at the energy stocks like Exxon, they're right on their highs. So there has been this kind of rotation. And of course, the S&P has a large, energy and financial weighting. So these kind of sectors going up help the S&P 500 or kind of hold it up at that 4,200 range, while the rest of these are kind of rolling over and the whatnot. And there's actually another trade too, Mike, I'd like to talk about. I think we should segue into gold. And this does it. Like, I think right now we still kind of have this hope trade. We also saw big rallies in airline stocks and casino stocks, off their lows in cruise ship stocks, cruise companies. And I think this hope trade is that now that COVID seems to be dying out, especially in the United States, and probably by this fall or late in the year, the combination of our herd immunity and the vaccines will cause the numbers to really die off almost everywhere. People think, we're going to go back to normal. So there's this hope, and that I think that goes into why gold has been going down. That the Fed's going to taper, we're going back to normal, right? And it's like, so it's a thing where it's like doing risk on trade, right? And let's get into stocks, and that's why they're so elevated. Things are getting back to normal. Well, we don't need to hedge with something like gold and precious metals anymore. And then also the talk of, tapering, that's seen as kind of more hawkish, and that hurts gold and precious metals as well. So I think that trade is kind of in there. Like I saw an interview with the CEO of Frontier Airlines, which is a newer airline that just started trading, I think, just over a year ago. And he was saying, oh, there's going to be a huge boom. Get cheap tickets now while you can, because when everyone wants to travel again, whatever, later in the summer or fall or winter, the ticket prices are going to go through the roof. And I think that's this kind of hope trade. But my argument against that is then the inflated unemployment benefits will stop. People sitting around trading, because they're from their house, and lockdown is going to stop. And also, I think what people are underestimating is, number one, how strained fiscally households, governments, everyone is now, because all this debt has been taken on during kind of the COVID crisis, and that has to be serviced. And then number two, a lot of small businesses that shut down, especially in these major urban centers, are not coming back. And some estimates are high as 20, 25, 30% are not coming back. And of course, those small businesses they're the biggest employers. Biggest employers aren't Microsoft, Amazon, Walmart. It's the small mom and pop businesses. And with that happening, I think we're not going to reach, where we were before the pandemic for years and years and years. So I think that when that kind of hope trade starts getting unwound, I think that's when you can see gold rally and the market kind of roll over. And when that hope trade gets unwound, it kind of means too that this talk of taper and rate hikes in 2022, they're going to kind of go out the window.
Yeah, it does. You would think any dip at all in the stock market, even 10%, would cause all that talk that we saw last week of, oh, they're going to be raising rates, will just vanish, wouldn't it?
Yeah, that's what I would think, So.
Well, right now in the market, what do you think is the best type of trading, or what are you doing in the markets?
Well, I've been lucky enough, me and you do these deals, and a few of the deals we've done I've done personally have done well. So obviously I'm taking some profits in them. And then, I'm just kind of actually upping my cash levels. Actually, for those interested, I know because we do private placements, I just had a new one come across my desk. And, one of the best, let me talk about this for a second. One of the strongest deals or mining companies in the last year has been Newfound Gold, which is run by a friend of ours, Colin Cattell. And his group is raising money at 90 cents for a pre-IPO deal called Golden Planet. And I think Sprott's going to be involved with that as well. So anyone who's interested is a credit investor. I will send you the forms, etc. And the minimum is actually 20,000 for this. But obviously, Newfound Gold is trading at $12 and has a $1.8 billion market cap. And I remember I raised money or helped, get people in that deal last summer at $1 a share. And now it's, $12. So if you're interested, this is the same kind of group. So I'm going to blast email on that over the next 24 hours. But anyhow, so yeah, I'll put a little bit of money and stuff like that. But mostly I'm kind of raising cash, maybe starting to add to hedge positions. I've got some out of the money puts on the Buzz ETF, some on the ARK ETF. I consider these just pure hedges because I still do own a lot of mining stocks. So Buzz is an ETF that does this thing where they use algorithms to see the hot stocks on message boards. And that almost reminds me of, Shoeshine Boys in 1929 or something, So I've slowly been adding to short positions via put options and things of this nature. And yeah, really, that's what I'm doing. I'm just kind of raising cash and going to be waiting because, like I said, I think if we see this blow off in the market this summer, with that combined with these complete excessive valuations that we have, I really think that leads to at least something like happened in 2015 or the fall of 2018 happening, meaning meaning like some 15, 20% drawdown and potentially more. But right now in the short term, actually, this is funny. I'm hedging my hedges. I actually have a few call options on Microsoft as a way to okay, the market blows off, Microsoft goes to 300, that makes up for my loss in my puts, and the market tanks and those little call options I have in Microsoft go to zero. or whatever. I make so much money in my puts, I really don't care about that anyhow. So I kind of have a straddle on Microsoft because I also have puts on Microsoft. So, but Microsoft, for example, that's breaking out right now. It's going above its April high. So I still think, you look at the NASDAQ, you look at this, it looks like NASDAQ is right on its highs now, both February and April. And yeah, if it does break 14,200, 14,300, it can go higher.
But the problem, it's very hard for me to get excited about doing new trades or telling people to buy things right now across the board when I personally bought last year. And I like to buy in dips or drawdowns in the markets, not, when they're just on their high after having gone up as much as they did in the past 12 months. So we are kind of have to do things like your trades with options on Microsoft and other ways, you hedge one thing, buy puts on something else, at this point, except for special individual stock situations. What is there to do?
The perfect example is last year during the crash, or whatever you want to call it, drawdown, I bought calls on SLV and on AG, First Majestic Silver, like the day it bottomed. And the reason was not because I'm some genius. It was just that this gold to silver ratio hit an all-time high, meaning silver compared to gold was the cheapest it had ever been. Last year, when you can see the SLV tanked down to whatever $12, $13, and then these calls went up 5-6 times on both. And I only did that because you can see it went down 11. I remember because I think I bought 12 or 13s, and I remember seeing an 11 print on the SLV at the time. And I only did it because of that. But you're right. When I really get a position I want to go long on, I want to do something like that. I want to find something like, perfect example is I had Barstool Sports come visit me in the Bahamas last year, and Penn took over part of Barstool. And I remember at the time I didn't buy it, unfortunately, but I at $4 when the guy from Barstool was here, I said, you know what, I'm really looking at Penn at $4 here. And you see Penn 76 now, and it went to over 120. Now, if I had bought Penn at $4, I probably wouldn't have held it to 120. I probably would have been out at maybe the highs at 40, 50, but still, like, that's when you want to buy something. And a lot of times, almost even in this great bubble that we've been in, 2012, Greece, 2014 and 15, Russia, other commodities, gold and silver, 2000 Brazil, even like perfect example is Japan. Japan for years and years was in this trading range between roughly like 10, 20,000 on the Nikkei. And I mentioned to you yesterday, Japan is now almost at 30,000 for the first time since its bubble. And I wrote an article for Financial Intelligence Reports, a magazine I write for, about buying Nikkei stocks back in 2000 and, back, 5-6 years ago when the Nikkei was in the low teens or something, or like 11, 12,000. And it was just because it was cheap and you had to wait for years. But now, the Nikkei's up 150%, and many Japanese stocks are up higher than that. So what you really want to do is you buy these cheap assets. Sometimes like Penn or like SLV last year, you'll be lucky enough to go straight back up. But then sometimes you're going to have to wait for years, but the returns are greater because you're buying, something down 90%. And it's easier for something to double, let's say, has gone from 9 to 1 back to 2, than buying Bitcoin at 60,000 after it come up from 10,000 last year. Well, what were the chances in the next 3 to 4 months it was going to double to 120,000? And then those last bubbles are tough to play because perfect example with Bitcoin, Mike, is it goes from 30 to 60, right? And like Russell Okung, the football player, he, put half his salary, asked for half his salary in Bitcoin when it was 30. Well, it looked like it had doubled, now he's right back to where he started, basically, right? I think the first pick in the draft, in the end, I'm a big NFL fan, Trevor Lawrence, he asked for a bunch of his signing bonus in Bitcoin. Well, now it's tanked. I don't know if he signed his contract yet, but he hasn't. That's good because he'll be getting it at, in 30,000 instead of 50,000. But it's just Tom Brady, the jackass, put his stupid glowing eye things and tweeted about Bitcoin right at 50,000. You should stick to football. And, Bitcoin has tanked 40% since. So that's another issue. You don't want to chase these things. You want to buy cheap assets. And sometimes that can be boring. Mike, can you put up a stock ATH.to? I actually sold this company a little too soon. I still made a little bit of money on the trade. This was a perfect example. See how long that stock, if you would have bought, say, that at between 10 and 20 cents when it tanked in 2020. And if, you could have bought that, at whatever, 10 to 20 cents, and you can see it's $1, but you had to wait almost a year or half a year. Like you had to wait 6 or 9 months, and that you made 10 for 1 on your money, and you make just as much as that as some crypto that soared 1,000% without the risk, because you were buying an undervalued asset. You're buying an oil and gas company that's got real assets, real production, real cash flow, et cetera,
Yeah, for sure. Well, I guess right now, the only thing really, the thing that's over the past few days, the thing that's dipped the most in the markets is gold and the mining stocks. We look at the GDX ETF. I mean, it's not a massive decline or something, but it's come down about 12% or so from $40. So there is a dip there. So I guess I'm already in it, so I don't really need to buy it. But I'm watching it closely for people who aren't, because I do think this can bottom out, or it will sometime soon. So I'm watching this very closely for a buy signal.
See, and that's another perfect example is that, go look at where this thing was in 2016, and then GDX was almost 12, and then, basically almost quadrupled to its high earlier this year. And then every email I got in early this year when the GDX had that correction there, from 44 to say 34, 32, it went up and went higher, right? So, everything was like negative. And then it went higher. It was like negative. Oh, you should be in crypto. You should do this and that. And then it goes higher. And then when it rallies back to almost 40, everyone's like, oh, the downtrends are broken. And look, I got sucked into that too, I have to admit. But the thing about that is, Mike, it's like that's why sometimes you don't want to buy these breakouts. You want to just buy the weakness and the whatnot. So, that's another thing to kind of look into. And by the way, another advantage we have kind of buying these private placements and the whatnot is we may buy a deal before it trades at a discounted valuation, or buy a deal that's depressed, even if the gold market has a rally, right? So that's kind of the advantage that you have doing some of these things that, maybe gold rallies back to 2000, but if you find a nice junior stock that is, say, still trading at a cheap valuation, we can do a finance or just buy it on the market or whatever it may be. And we can, we have the ability to, to do that, right? So, I think the perfect example is we own a little stock called Sonoro, SGO.V. And, this stock during this correction in gold, we bought I bought the financing, at 18 cents. And you can see I'm still up about 50% on that financing. And that's even with this recent retreat in gold, because at 18, the stock was very, very undervalued,
Yeah, and it's held like a rock.
It's held up fine. It's basically
over 100 points. So
it's actually pretty close to its highs last year when gold was over 2,000.
Yeah, it's really doing very well. Well, I don't want to keep you much longer.
I got to do something in about 20 minutes. So that's
we'll do. I don't have much more to say myself. I'll do another video in a couple of weeks. Unless something big happens. But if there's anything.
No, I just think like I know it doesn't sound exciting, but right now I'm kind of just slowly adding to short positions. I'm kind of raising some cash. Yeah, if one of these deals comes Mike and I's way, like I just mentioned, the Golden Planet deal, if people are interested in that, and it's got a good group that's basically got the hottest gold and precious metals deal on the market right now. If you're interested in that, fine. And remember, like what I'm doing with that deal is like the money I'm taking off the market right now, like that's a fraction of what I'm taking off. I'm putting back into that. Right. So anyhow, that's that's kind of what I'm doing. Like I said, adding to some hedges, and I'm just kind of waiting because I kind of like to see maybe the gold market shakes out a little more before adding positions there. And I'm also want to see if we see this summer kind of blow off in the equity markets before I aggressively add maybe short positions.
Yeah, it's going to be interesting to see how the market unfolds as it trades. I'm going to make one last comment. I'm just looking. The people are leaving comments in our video, and someone I think is mad about the way we talk about Bitcoin. They're saying it's not a stock; it's in the category of money, like gold is. I would just say when you invest in things, you got to decide what you want to invest in. If you buy a stock, you own an interest in a company. You get dividends, you get earnings. There's an underlying asset to it. So you can do valuation metrics like you pointed out with that oil company in Canada. What was the name of it?
Athabasca.
Yeah, that Athabasca oil. You can do look at the balance sheet, what it's worth, and when things have a big drop, there's value in buying. With crypto collectible coins, there's no underlying asset. It's all pure speculation. And if it goes up and you can trade that, that's great. But there's no real fundamental investment value in that. So it just takes a different category of speculating, or I would say gambling, to really want to do that more than doing stocks. But that's just my opinion. And, there's still crypto people out there. But Jim Cramer is even facing criticism now because he told people he's selling his Bitcoins.
Here's my opinion on it. Actually, one of the investments I've had do really well is a crypto-based company. And I was lucky again to get in one of these cheaper financings. But since I've talked about it, it about doubled, and it was up as much as 3 or 4 times. And the thing about it is, it's like, I think, look, if you want to put 5% of your money in crypto, I'm not an investment advisor, it's not investment advice, fine, go do it, right? And you want to buy like a little bit of it, but it's so volatile. It's like we do these juniors. I don't recommend someone put all their money in juniors. That's gambling money. That's like aggressive money. Again, 5-10%, even if you're an accredited investor, right? So that's the way I feel about the cryptocurrencies. And also, I disagree with that. I don't think it is money, because the trading history of it is it had huge spikes in 2017 and this past year. And they're both when there were huge speculative spikes in tech stocks and the NASDAQ. I think it's just an aggressive speculation. And that guy might get mad at me for saying that, but that's what it is. And I want to see that if we get another drawdown in the stock market, how cryptos act. Because in 2018, they went down 80% when the market went down 20, right? And the market's at its highs and they're off 50, Now, granted, they still done very well in the last year. They still about doubled or tripled in the last year. Well, what happens if the NASDAQ finally sees a 30 to 50% bear market? Well, what's crypto going to do? I don't think crypto is going to act as a hedge. I think it's going to go down like it did 2018 or like it did last year. It did the same thing March, April last year, So that's my opinion, and the crypto people may not like it. And then also, from a psychological standpoint, this might be more important than anything you believe in the cryptos, anything, charts, anything. That conference that just happened in Miami was the most maniac type thing I've ever seen in my life.
Oh, that was just 2 or 3 weeks ago.
Yeah. The Winklevoss guys were there. I think it's Logan Paul, one of those Paul guys, the big YouTube guys were there pumping crypto. Tim Dillon, who's a huge comedian, he hosted one of the panels. Like, he would have cost $100,000. And the people were absolutely, like insane, and it's like cultish, and there's people lined up around the corner to get in. And I remember in 1997, when I started in the junior mining market, it was about the time Bre-X was getting exposed as a fraud. So I'm showing my age here because that's 25 years ago or 24 years ago. And I remember the mining show in Toronto was packed. There were people had all these conspiracy theories that that Freeport-McMoRan, which was the joint venture partner of Bre-X, was intentionally putting out bad results so they can then buy the whole asset cheap, all kinds of crazy shit. But the main thing was people were lined up around the corner. The conference was totally packed. And then 4 years later, when I'd go to a conference in 2001, there wouldn't be anybody there. And by the way, what I'm trying to say is that was the top. Most of those juniors melted down 80, 90%, even more. And that's what it's like at a mania or a top. Like that thing you saw with Bitcoin, that's shoe shine boys, that's tulip bulbs. That is not something that happens early on in a bull market. That is mania type psychological behavior. And like I said, I'm not bashing Bitcoin. I'm just saying that what happened there, that's what it is. Okay, I'm sorry if you disagree with me, but that to me is more important psychologically where you are in the bull market than, than anything else,
Well, I remember maybe going to investment conferences when there's no one there is a great contrarian indicator saying now's the time to throw everything you got at something. Because we went to a gold investment conference in 2008. I think it was the last one I ever went to, actually. And the markets were crashing, and there was a giant conference hall. There's like 10 people in the whole audience.
I can't remember who was speaking, but
that's what I try to remember too.
I try to remember speaking, but we were laughing because there's 10 people there and like 3 of them were like sleeping. I remember that. And then actually another, just to end up in this, another example is this is Mike and I had our own conference in the Bahamas when I was living in Nassau in 2009 at the Atlantis Resort. And that was like 2 weeks after the market bought and started to rally. And I was the only one bullish on like the stock market at the conference. And I wasn't hugely bullish. I never thought this thing would go on for 12 years, but I thought at the time we were kind of seeing a 1974 or 1929 type bottom, which mean we would see like a 2 to 4 rally, or sorry, 32, type bottom, which means we'd see like a 2, 3, maybe 5-year rally off the bottom, right? And no one else even believed that. Everyone thought the S&P was going to 400, right? And here we are now with the S&P at 4,000. And that was another example that it was like everyone there was bearish, right? So, actually, I remember because I talk about these ratios at the time. The gold to copper ratio was sky high, meaning copper was cheap compared to gold. And I remember I made my speech. And copper was like $1.40 then, and gold was like almost 1,000. And in my speech, I said I'd like to melt down my gold and turn it as copper as a joke. And of course, copper went back over to 4. And gold did go to 1,800, but copper tripled and gold didn't even double in the next move or the next couple of years. And I remember people were attacking me, the gold bugs in the audience. So there you go. People who think I'm a gold bug, I was telling people to buy copper over gold in 2009, right? So anyhow, it's just the psychology of these things. And like you said, and I used to speak at the Cambridge House conferences for years and years. And I just remember the difference between the way they were, say, in 2002, and then the way they were in 2007, when the gold stocks were hot. So you just see it. And like you said, empty conference halls are probably a pretty good sign, of a bottom. Like first example is, I know they didn't, I don't know. I don't think they did that Miami conference last year, but just think what that Miami conference was like probably in 2019. It was probably pretty dead in there after crypto had fallen 70, 80%. And like I said, I'm not a huge crypto guy, but that was probably a sign that it was okay to buy, right? Or now it's a total, what's happened since that crypto conference? What's happened since Elon Musk was plugging Doge on Saturday Night Live? Everything is tanked.
Yeah, it is pretty wild. Well, thanks for taking the time to talk to me and everyone else, and we'll have to do this again in the future sooner.
Yeah, thanks for having me. Is it done?